Hey guys, it's hawaiianbeef. Welcome to my first video. We're going to go over what happened today in the market, why I got caught unawares, and what to look out for in the future. So today we had a pretty red day in the market, and I'm going to be explaining why that happened, why I got caught unawares, and we're going to try and have some predictions for the future. So we're going to be using its all-time high over on the QQQ. We're going to focus on the Qs because they're the ones who are going through this, possible correction. But we're going to be using the November 22nd high, which is like 408, 409. And then we're going to use its low in this fib structure, which is about 369. And as you can see, it's pretty clean. There was a base, there was a retracement, which is very common on fib structures when you have a high and a low and it's just decided that this is going to be it. Where you go from the 100 to 0, you usually have a 50% retracement. And then from there, basically the ticker decides if it wants to continue being bullish or if it wants to die, choose death. And that's what happened today. QQQ looks like it really has chosen death. It tapped it twice, and that is a very clear rejection. A lot of people were very bullish, including myself, thinking that this 9.68% range was enough of a correction on the Qs and the NASDAQ, but it's looking like that we might have some more pain to go. Now, a traditional correction usually, is 10 to 15%, I believe, and it can go upwards to 20. So I want to have like an expectation for people to have a plan with for those percentages. Looks like for, let's say, traditional 15%, it would be somewhere around the 350s. And then for normal, 10% minimum, we're looking at around 360s. Now, of course, it's not always going to happen, but we are looking at neutral bearish price action when it comes to the Qs and the market in general as they're going through this rotation. So we're going to come up with a plan, ideally, with all that in mind. This is all very complicated lines and whatnot, and we're still using that one fib structure that we made earlier. But we're also using a fib channel that HAL only patterns definitely turn me on. It's basically, it gives a really good standard deviation channel. And as you can see, it has some confluences here and there. It kind of respects that channel throughout. Doesn't deviate too much, and it seems like a really useful tool for indexes that I'd really like to use in the future. But yeah, you can see on both highs here, we had, very little momentum. The RSI kind of gets oversold. It's just, it gave us this double top over here on the daily, and then had a bearish divergence here that really started everything off over in November. And that's kind of where we're at. Using some trend lines, using some, pseudosciences like Elliott wave, we can have a general idea of where we might end up. We have a couple possible scenarios that I'm thinking. And we gap down overnight, we touch this trend line, develop a higher low, and then we could immediately reject this very, very harsh 383 line that we have here. It's where we rejected before, and that might line up over here on this fib channel, and we could just go down, or we could follow Elliott wave and find some confluence and some rally support all the way up here, and then test this downtrend channel that we have, which kind of lines up with OPEX. I'm sorry, a rally after OPEX, which, is next week on the 21st. So let's say we kind of dangle around here for a couple of days. We get up here, we might reject, But after OPEX, kind of dangle around and then rally going into February. And then probably take our time. You could argue that going into March is where we'll find our full correction. Down over here. A lot of things line up with that, including, election cycle, tapering, more economic data that's coming out to impress that we might have higher inflation. 2 months in, this is after all the earnings. This is where smart money starts to rotate into companies for the future expectation. So I was personally bullish until February, but this latest price action is probably going to be short-term bearish into more of a rally into February. And it can happen over like a series of, 4 or 5 days, which we saw back in December for that Santa Claus rally where we just went boop, 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 boop. We just gapped up 5 days and gained 27 points. So it can happen really fast. We can dangle around here and then boom, right over there. But we end up finding some confluence over here with some silly Elliott wave rules, fib channel, downtrend. So this is a very powerful confluence point over here of about 399, 398 area. And that's going to, and time frame. So that's going to be something to look out for. And then we'll go down here, Ides of March, then we get the election cycle, blah, blah, blah. And then we rally into the end of the year after that correction. So this is kind of like an easy expectation that we can follow. I'm personally kind of like all cash right now because that rejection there was very telling, and it basically means risk off, and I want to see how the price action develops and see if some of these predictions come true. Also, I wanted to bring up of note, using 007's smart money indicator, smart money is flowing into TLT, which is bonds. Last couple of weeks, we've been talking about how the TNX, the 10-year yield, has been rallying really hard, how TLT has chosen death since the last FOMC meeting, and it's finally found its range, it looks like. And like how the Qs high-low and retrace, there is an expectation here to go from a high-low to retrace, and this will put pressure on equities. Normally, TLT and the stock market and equities have like an inverse relationship. If this is rallying, usually equities have pressure. They don't usually rally. In fact, sometimes they dump. And that you can see that over here. This is more of a long-term TLT channel using the same fib channel earlier from the COVID highs and lows. And you can see over here we had some confluence with the top of the standard deviation that's creating our interim top. We had some confluence over here with just a basic, strong area of support. This is a breakout level from this clear accumulation area, and it's found a bottom. So we can basically say that this is our foreseeable range until we can retrace. Now, the expectation using this confluence of both the channel and the structure is that TLT is going to find its way to 148 relatively whenever. And after it gets over here, you could argue that there's enough confluence over here of its retrace. Of course, price action will dictate. And we might find it doing what the Qs did and, test it, dirtle around, test it again, and choose death. That would line up with end of March, April, where we expect to rally for a summer rally into the end of the year. So So you can see that kind of correlation with bonds, with our expectation with equities for that time frame for SPY in this area to possibly keep its uptrend in this channel and then just blast off. So what it seems like the expectation for SPY, boom, 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 probably do something like that. A douche. A duh. Oh, nope. Stop it. But yeah, you get it. We're basically going to be focusing on the Qs in the coming weeks to define our trade plan because it has such a high weight in SPY, because it's been clear about this value rotation that's been going on into XLB, basic materials, value stocks like AT&T, and we'll see if we keep this range. I have alerts for both sides. But yeah, this is my first video. Ideally, I'll have a script next time and not off the cuff like I'm doing right now. And have some quality content in the future with like West, Hal, whoever wants to go on, talk about some things. Thanks for listening.